Good afternoon, ladies and gentlemen. Welcome. I am the Crypto Crow. This is going to be a very short video. I think this is really going to be eye-opening because I just discovered something in Bitcoin that I wasn't expecting. I really wasn't. And it really kind of changed my mood real quick. I've been pretty sick. I've been, since the hurricane, I've been just kind of all over the place. I feel like I'm starting to finally get through it a bit. I came up today and I'm like, I want to start looking at Cardano's price history. I really want to start diving deep into it. And in the first phase of that, I discovered something in Bitcoin and I'm like, Cardano's going to have to wait until next week. I'm going to do a video on this right now and I'm going to show everybody. So let's just go ahead and dive into it. So I was looking at Bitcoin's price all the way back in the previous cycle. And I was trying to understand, basically, given where we're at right now and the way the all-time high appeared before the halving, the first time Bitcoin's price action reached a new all-time high before the halving of the new cycle. And I thought, how does this play into what could potentially be happening this cycle overall? Because the institutions are obviously getting into the space in droves. There's so much going on. We're seeing it all over the place. There's so much happening in the space that is likely going to continue driving adoption in big ways, even though the retail market has been fairly dead of late, well, for a while now. And we see that because when the retail market isn't there, and it's just the institutions, they're aping in in a very intelligent way. Many of them are also aping in over the counter. So they're buying a lot of these assets over the counter that's not being represented well in the charts. But when they do buy on the charts, that means they're looking to start driving the market forward. And in order to draw in that mass adoption and draw in the retail market, there has to be clear signals that the market is gone bullish. And I don't just mean bull market. We've been in a bull market for a while now, but I mean bullish. The sentiment has been everybody's bullish, the market dumps. Everyone's bullish, the market dumps. Everyone, and it's been repeating itself. Now the sentiment has finally gotten to a point where everybody's expecting the price to go lower, and we get this recent pumped. But I'm thinking to myself, on an algorithmic level, if I were an institution and I were potentially algorithmically trading the market cycle after cycle in a very specific way for whatever reason, what would be the pattern, right? We've seen these patterns play out, but they change every cycle. So what is the big change in this one? I believe it's likely going to peak before we're used to seeing it peak, and I'll explain why. So if we look at the current price right now, we just broke out of this channel in a big way, and we're seeing almost 69,000. Okay, we did wake up to about $69,000 here, and that's wonderful. But what does that mean overall? Does that mean we're going to continue moving up, or is this where we're going to basically be declined and get the rejection and start moving back into this channel? I'm going to hazard a guess this time, and I really mean it. I'm not just doing this. I think we're done moving down. And I'm going to tell you why. Because if we look at where the price action was against the Bitcoin halving in 2024 in April, what we could do is we can measure the price 220 days from the all-time high to where we're at right now with this big pump. What does that mean? Let me just show you. Because this is getting crazy. This area right here is where we've been since, well, this was 218 days. This was after the halving of the 2020 into the 2021 cycle. So what happened was we got our halving here. We continued to consolidate sideways for a while, got a big bit of a pump, came back down, consolidated, and we started to move up until we got our rip-roaring rip to the upside, where we saw our first peak, our second peak. I mean, we had all these peaks and valleys here. But what happened, what I'm trying to point out, and what I think is happening is our market cycle was pushed forward by approximately 218 to 220 days. And I think that because if this is from the time of the halving of 2020 and the new all-time high, which was around 20,000. When we started breaking into that new all-time high territory, it took about 220 days from the halving. If we go back, and then it was another 330 days until not the first peak where the pi cycle crossed over, but the second peak where we basically hit, we looks like we wicked up to around $69,000. Well, we got the all-time high before the halving this time at around 74,500. But that was 220 days ago, folks. So basically what I'm trying to say is I think that there's a good chance that we could either A, be entering an official super cycle, one that's been predicted now for a couple cycles and hasn't shown up. The last market was broken up quite a bit. Honestly, I believe partially due to COVID, but I also believe that we are basically entering an accelerated state where as the institutions are in, they've been getting in slowly over time. I'm sure under the radar and then above the radar through these ETFs and the like, right? So they're in. They've been accumulating for years one way or another, likely through over-the-counter trades and vehicles like that. But now we are in a position where 220 days after the all-time high, which was originally happening after the halving, which was pushed forward because of these ETFs, and here we are getting this significant pump out of this channel 220 days later, which if we were to follow the previous cycle but move the market forward, we would likely peak, not from the first peak, but the second peak approximately 332 roughly days from now, which would put us in September, not October, and not beyond, not in November, like a lot of these other, like we've equated in other calculations. So I'm going to hazard a guess and say, unless the institutions see this video and they say, oh, someone else has figured it out, we've got to change the pattern, I believe that we are now going to start seeing up only from here on weekly candles, most likely. And doesn't mean that we're not going to get these significant 20%, even potentially 40% drops. But what I do think is that effectively we're going to start seeing very strong upward momentum from here as we conclude October. I do believe that October is going to become Uptober officially by the end of the month, and then we're going to have the election. The election is likely going to send everything further, and I think we might very well be entering into a super cycle, because I do believe that if the man is elected and all of these different power players in the space, both economically, crypto, socially, all of these different players, if they're able to enact a new administration that is favorable and pro crypto, that in effect by itself could push us into an actual legitimate super cycle, because honestly, I believe at that point, the floodgates will open for the true tokenization of assets, as Larry Fink has explained is coming one way or another. And I believe that there's no better person for that than the administration that's running against our current sitting administration, because they actually have a track record for crypto adoption, crypto support, and the like, even against the grain of the current administration's SEC and all of these other groups that have been trying to push against it. So I think everything is lining up right now to get extremely bullish for the rest of this month and into the next month. And the next week, I'm going to start going into what is happening with Cardano and altcoins. We've obviously had this narrative about Cardano and it zeroes in on Cardano for some reason, even though it's been very similar patterns across the board with Ethereum and other anything that's venture capitalized and centralized has been pumping. I mean, but it doesn't take a rocket scientist to figure out why. But any of the more decentralized assets that are out there have been losing steam for a lot of reasons. And I think that we're going to start seeing the narratives pick up on the decentralized nature of cryptocurrencies and how that benefits everyone as a whole. We're seeing these narratives play out physically on chain and the like, while others are trying to inflate and manipulate and do all kinds of things to basically make themselves appear to be ahead of the race. But as far as their technology, they're not. They're far, far, far behind and very, very flawed with a multitude of red flags. And I think that these narratives are actually going to start changing as we start heading further into October and the rest of the bull market. People are going to start wisening up. They're going to start probably pulling back from the meme coins and start really getting back into the layer one and even potentially layer two protocols that are actually going to help this market excel roll into the next phase, which is going to be the tokenization of real world assets. Of course, we're going to see major plays in AI, Web3 gaming, and the like. We're probably going to start seeing Cornucopias and other gaming assets start to take off. I think we're going to start seeing some really dramatic changes here in the not so distant future, and I think it starts now. Until next time, crow your coins. Thanks for joining me and enjoy your weekend.